Hi, and welcome back to the Day Trading for Beginners podcast. In this episode, we are talking ETFs. So on this journey to become a day trader, what I want to do is get a good base of all the stock market basics, some fundamentals, and that is where we are in this journey. We talked about what stocks are in previous episodes. We talked about what bonds are. Here we're going to talk ETFs, and then we have a few more episodes with some more basic stock market concepts. So let's jump right into it. This episode, we're going to talk about ETFs and just in a very sort of beginner friendly type of discussion. And I have once again used the AI tool Grok from X to help supply some examples to make this a little bit more maybe fun and engaging rather than quite dry or boring, which some text about ETFs can be quite dry. So let's jump into it. What is an ETF and how do you trade it? Those are the two sort of questions we are going to answer. So ETFs, it's kind of like the Swiss Army knife of investing. And I like to think of ETFs after researching them as sort of a combination of stocks and mutual funds. So they're like mutual funds because they offer diversified investment portfolios managed by professionals. But they're also like stocks because they trade on stock exchanges and their prices change throughout the day. So this combination provides investors with a unique blend of the benefits from both worlds. You get the diversification and professional sort of management that you would get from a mutual fund, plus the trading flexibility and real-time pricing of stock. So here's an example that Grok gave me for discussing ETFs. So an ETF, or exchange traded fund, is a type of investment fund that is traded on stock exchanges, much like stocks. It holds assets such as stocks, commodities, or bonds, and often tracks an underlying index. So it's an asset that holds all these other things. So you can think of it like a box of chocolates, but instead of chocolate, it's filled with different securities. And just like you can buy and sell chocolate boxes, you can buy and sell ETFs on the stock market. So they're like the Swiss Army knife of investing, offering a variety of benefits like diversification, lower fees, and tax efficiency. Plus, they can be traded throughout the day, unlike their close cousin, the mutual fund, which can only be traded at the end of the day. Let's say you're a big fan of renewable energy. You could invest in an ETF that tracks the performance of a basket of renewable energy companies. This way, you're not putting all your eggs in one basket or, one solar panel, as the case may be. Now, let's talk about trading. This is very, very easy. You can buy and sell ETFs just like stocks. You can even short them or trade them on margin if you are feeling adventurous. Just remember, with great power comes great responsibility, so be sure to do your homework before diving in. In short, ETFs are a convenient, low-cost way to invest in a variety of assets. They're like a buffet of investment options, so you can pick and choose what suits your taste. Just remember to invest wisely and always do your research. So that is sort of the rundown example from Grok, sort of like a fun, easy to understand sort of example for what ETFs are. So there are various types of ETFs. So there are stock ETFs. So what these are, they would track specific indexes like the S&P 500 or the NASDAQ. There are bond ETFs. So these ETFs invest in various types of bonds, as you would expect. Then there are sort of like industry and sector ETFs. So these target specific industries like tech or banking or healthcare. There are commodity ETFs. So these track the price of a commodity like gold or oil. And then there's international ETFs, which focus on investments outside of whatever geographic location you might be in. So those are some of the main types. Now, there is this difference between passive and active. So although this is sort of a discussion which just talks about, what ETFs are for, just for beginner types of knowledge here. We're not going to go too deep into how they're created and all that type of stuff. But passive versus active is something that we should probably discuss. So passive ETFs, their aim is to replicate the performance of a specific market index. So they are not actively managed. Instead, they just follow a set of investment strategy that typically involves holding all or, a representative sample of the securities in the index that they track. So for example, you can get the SPDR S&P 500 ETF trust, which is called SPY, SPY. It's a classic example of just a passive ETF. It is designed just to track the S&P 500 index, representing the 500 largest U.S. companies. So if you want to invest in, a even distribution of these top of these 500 largest companies, you can get the SPY ETF. And it's passive, meaning no one is going to change what's inside that basket of stocks. Now, there are also active ETFs, which are actually managed by portfolio managers. They actively, make investments decisions, trying to outperform the market for a specific benchmark. So a really popular one that you've probably heard of is Kathy Wood's ARK Invest ETFs. She is, on social media quite often and on CNBC as well. So those are examples of active ETFs. So ARK Invest is known for its focus on disruptive, innovative investing into companies that they believe are poised for growth and technology advances. So their investment decisions are based on extensive research and analysis, aiming to capitalize on market inefficiency. So meaning, they're going to change what is potentially in their ETF. They might buy more of one stock, or they might sell a little bit of a stock depending on what's happening. So it's actively managed, where a ETF that just tracks an index is sort of just very passive in nature. Now, some of the advantages of ETFs, firstly, diversification. ETFs, they offer exposure to a group of equities, diversifying your investment. So, maybe you want to invest in the energy market or the financial market, but you don't want to kind of risk an investment on just one company. You kind of want to just invest in many of them. You can easily do that with an ETF. Lower costs. So generally, ETFs have lower fees than mutual funds. Liquidity. ETFs can be bought and sold during trading hours like stocks. So it's very easy to buy and sell these throughout the trading day. And then tax efficiency. So ETFs are more tax efficient than mutual funds due to their unique structure. So how would you trade ETFs? Well, it's very, very simple. You just open a brokerage account. You can do this online. And then the same way you would buy and sell a stock is how you would buy and sell ETF. So you just need an account. And again, you can deposit money from your bank to your brokerage account. You can buy and sell ETFs through your brokerage account, exactly how you would buy stocks. Now, you might want to do some research. Again, you can choose ETFs that align with your investing goals. Consider factors like the ETF's focus, the performance, history, fees might be something that you might want to look at as well. So trading ETFs is very easy. Let's review just some key insights. Again, it's always good to just get a good background of these various types of securities. And that's what we're doing in this beginning phase of this journey to become a day trader. So why don't we end this episode with just reviewing some of the key insights that we discussed. So firstly, ETFs, it's a blend of stocks and mutual funds. That's one way of kind of looking at it. Exchange traded funds, ETFs, these offer the best of both worlds, combining the diversification and professional management of mutual funds with the trading flexibility and real-time pricing of stocks. Now, what makes ETFs unique. Unlike mutual funds, ETFs can be traded throughout the trading day. They offer investors more control over their buying and selling decisions. This makes them similar to stocks. What's great about ETFs is you can diversify your investment. ETFs hold a variety of assets, including stocks, commodities, and bonds. So this diversification can help you reduce investment risk if that's what area of investing you are sort of at. The benefits, these include, exposure to a wide range of assets, generally lower fees than mutual funds, and then the ability to trade them like stocks. We talked about the types of ETFs. There's passive ETFs. So these would include ones that track the indexes like the S&P 500. There's also bond ETFs, which, invest in different types of bonds. And then there's active traded ETFs like Cathie Wood's ARK Invests, where, they're going in and actually changing, selling and buying and selling various assets and securities that are held within that ETF. Trading ETFs is very simple to the exact same way you would trade stocks. And, your investment approach, ETFs, they kind of offer this buffet of options, allowing investors to pick and choose according to their investment tastes and goals. And as with all investments, wise decision-making and thorough research is always key, even when investing in a relatively diversified security like an ETF. So I think that wraps it up. That is a good sort of summary of what ETFs are. Again, we are looking to become a day trader. Obviously, we want to have some knowledge about ETFs. I don't think we're going to be trading them as we move on to our journey, but it's always good to get a good understanding of all aspects of the stock market. And that is what stage we are at with this journey. So subscribe to this podcast. I hope that you found this useful. The previous episodes, we talked about stocks, we talked about bonds. Here we talked about ETFs, and we have a few more of these stock market basic discussions that we're going to have in the near future. And then we're going to get into, taking even more action towards the specifics of day trading. So subscribe to the podcast. Below in the show notes, you can find links to all the other social media channels that we are documenting this journey on. So I hope that you found it useful, and I will talk to you in the next episode.